So today we have the third in our panel series on MiCA, markets and crypto assets. Today we cover CASPs, or crypto asset service providers. Now, there are many conceptual appeals to MiCA for US crypto natives. One is this notion of a common framework for licensing crypto asset services providers. Now, in the US, these could be classified as money transmitters or of convertible virtual currencies. Where if you are either receiving or processing CVCs, convertible virtual currencies, you need to evaluate licensing requirements across every state where you intend to do business in. It's an expensive and time-consuming endeavor. At the end of it, you have to worry about bit license because that's the hardest one to get. In addition, there are a series of open questions, which are not unlike what you would have in Europe, as to whether or not you have to be an alternative trading system, a licensed custodian, a trust, a broker-dealer, a futures commission merchant, or a number of other designations. The difference is, of course, is that this sort of gives you clarity that the business that you're operating with isn't going to suddenly be upended by a new interpretation. Like, there is a recognition that there is a framework within which to operate in as a crypto asset services provider. We don't have this in the US. We really don't. Even if you go and you get your MTLs across multiple jurisdictions, some states are still figuring out what they want to do on CVCs. Other states are constantly reevaluating. There's no such thing as a regulation that stays static, but nonetheless, to get a framework that gives you clarity across multiple jurisdictions within the EU, that's something we just don't have. So joining us today, we have the same or similar panelists as we've had on the first and second podcast. Alexandru Stănescu, partner of SLV Legal in Romania. Alireza Ciudat, partner of Anderton in Germany. Francesco Patti, professor of private law at the University of Bocconi in Italy. Marina Markizic, co-founder and executive director of the European Crypto Initiative in Belgium, and William O'Rourke, co-founder and partner of ORWL Avocats in France. So, got another great one for you today. I hope you enjoy it. We have at least one other following this where we're going to cover things like how MiCA interplays with all the other regulations in the EU and some of the local components of it. So nonetheless, hope you enjoy this episode. It's another great one. Welcome to The Encrypted Economy, a podcast exploring the business, laws, regulation, security, and technologies relating to digital assets and data. I am Eric Hess, founder of Hess Legal Counsel, and your host. Join me on this journey, exploring the reach of these transformative technologies. I'm so excited to be back for our third panel series on MiCA with our guests. Last time we discussed, in the first episode, we discussed definitions and the scope of MiCA. In the last episode, we talked about specifically issuances much more. And today we're going to be talking about CASP, or crypto asset service providers. So again, thanks everybody for joining for this third panel session. I think we'll just start off with Francisco, telling us what a CASP is.
Yes, thank you very much, Eric. So a CASP is a crypto asset service provider. I know that Americans love the acronym VASP. We use CASP, but it's almost the same thing. And it's an important part of MiCA. A lot of people think that this will be the most impactful part of MiCA. It's also a set of rules that will harmonize the European law at the level of crypto asset service providers. Nowadays, it's not harmonized. In some countries, we have very precise rules. In others, we don't have any rules. And basically, the only similar playing level field that we have are the rules on anti-money laundering, which now apply to the crypto asset service providers. But we are going to have these new rules that basically provide different rules with respect to fundamental aspects. So mainly it's licensing. We've already seen the licensing is an important part of MiCA with respect to the offer of crypto assets. We have licensing for electronic money token, asset reference tokens. We have this duty to notify other crypto assets. In order to provide crypto asset service providers, we will need licensing. The good news is that the licensing will be European licensing. And so the fact of having a license in one country allows, in principle, the CASP to operate in all the European countries. That's important because nowadays it's not like this. And so if you are allowed to operate in France, theoretically you cannot offer the crypto asset services to a German. And so of course the legal landscape is very unclear. In this sense, it will be an addition. And then there are also like other rules that deal with crypto asset service providers that are particularly of a big size, that have a significant volume, and they are going to undergo rules which are stricter, and they will also be directly controlled by ESMA, which is the European authority. Whereas this licensing at, let's say, a national member state level will be provided by the authority of the national state where the crypto asset is located. And so it means that if it's located in Lithuania, he will apply with the Lithuanian authority, and then due to the treaties of the European Union, the crypto asset service provider will be able to offer its services to other countries. This is something which is not new. We have a regulation which is similar to MiFID in this sense. So the idea that basically there is an harmonized set of rules, and that this service provider can operate in every part of Europe. The conditions, let's say, to operate are similar to MiFID. Like, you can always make a distinction, not only with MiFID, also with, for instance, rules about credit institutions when it comes to safeguarding of funds or other aspects that are regulated under MiFID. And so like the person who is, let's say, who knows a European regulatory law finds always a correspondence between what we find for crypto asset service providers and something which already exists. One important aspect, like before, I would say also to nominate a bit which are these services, because there is a list of services, is the fact that, so when we think about CASPs, we refer to, of course, to Binance, to Bitpanda, other big players in the world. But like MiCA takes also into consideration the possibility that these services are provided by institutions and entities that already are licensed at a European level. For instance, credit institutions will have the possibility to offer crypto asset services. And I think that this is a very important aspect, because it means that basically you're allowing, with an express regulation, also institutional players to provide services which nowadays are provided only by entities that are, let's say, a bit outside of the institutional financial world. And I talked about credit institutions, but the same holds true also for other types of regulated entities, also with respect, for instance, to investment funds. And so this will open up also the possibility for, let's call them, traditional players to deal with crypto assets.
Let's say that you are a custodian for digital assets. You can, and that's all you're doing. Would it necessarily draw in other licensing requirements?
So no, like custody is one of the items that we have in the MiCA as a service, as like a crypto asset service provider. And then we can raise, as I've said, a correspondence to something similar that we have at the European level, which we find in MiFID, for example, the custody of financial instruments. And if you look at the rules, you have basically the same rules. What is interesting is that with MiCA, you open up the possibility also for people that are already licensed according to other rules to provide the same services. And so, like when we think about custody, we can think Anchorage as, for example, an American example of Custodian. This new Custodian could take a European license and operate all over Europe, and that's a great advantage. But for instance, if we have a player that already does custody for financial instruments, it could be possible also to deal with crypto. Like he needs to inform the authority, but this will be granted to him. Then perhaps he will not do it because of course you need a certain expertise. But it is possible that they're going to offer also services related to crypto. They could team up with already existent crypto asset service provider. I made the example of Anchorage. For instance, Anchorage could work with traditional banks and provide custody, given that they have a particular expertise for this, just to make an example. And so I think you are open up to a wide array of crypto asset services, which will be regulated in a way which is similar to what we already have at a European level. And as I've said, the services are different. Now, yes, I give you the word, Arisa. Services are different, and you apply always for one or more services. So it means that depending on which is the CASP, it will choose one service or the other or more than one. It depends. But basically, you are then allowed to provide the service for which you got the license.
Yes, I would absolutely agree to what you said. And I just wanted to add a little bit on that because it goes a little bit in the direction what you were just asking, Eric. So assuming that we have a crypto custody service provider, and this crypto custody service provider is providing the custody of the crypto assets or the safekeeping of the private keys, but then it also offers to its clients, let's say, staking. So staking is something which you could do with the crypto custody license already. And so you should look at the crypto custody service provider, what is intended to be provided to the users or to the clients, and then think of the license you may need. And what I think is very interesting is that in the most recent version of MiCA, they added a new CASP, which came like in a last second. And it's the providing transfer services for crypto assets on behalf of third parties. And this is something where I would just like to raise the question, like to understand what you think about it. For me, providing transfer services for crypto assets on behalf of third parties, it is good that when you look inside the MiCA, if you scroll a little bit down, it also defines what it means. And so there is a definition for that. And it says that, providing transfer services for crypto assets on behalf of third parties means to transfer on behalf of a natural or legal persons crypto assets from one distributed ledger address or account to another. So I think it is kind of like catch-all clause, something which they put in because they saw players like, let's say, OpenSea, where you can connect your wallet and you can transfer your NFT to some other wallet. And I believe that the ones who put this clause into the MiCA, they were thinking of covering something like OpenSea or something like Wallet Connect, where you provide a service or where you can connect your wallet and then transfer your assets to some other wallet. And many crypto custodians, they do something similar. So I would like to understand from my co-speakers, what do you think? Is this providing transfer services for crypto assets on behalf of third parties? Is this already covered by crypto custody? So is crypto custody broader, or is it something different, or is it maybe something totally different, which I didn't understand? But this is a very interesting one.
Yeah, I think it's a good point to add on this. Like, of course, it's a bit worrying to hear the scope of this service. There is a recital that clarifies that like nodes are not contemplated. So the fact that you are a node and basically you contribute to transactions, this does not make you a crypto asset service provider, which is good news. Otherwise, we can close the blockchains. And but you're right. Like it's something which is a bit unclear. I think. But it's the first time that I think about it, so perhaps it's completely wrong. Also, bridges could be like a difficult point here. Yes, custody, I see it as a more static service in which you basically put your crypto inside. Although I have to say that often they also provide other services because a lot of time they buy on behalf of the client, and so. It will be interesting to see like how many services you need to be requesting in order to be licensed to provide like a service which seems normal custody. Because if you provide also exchange, transfer, etc., which is kind of common for these players, then I think that in the end you will ask a license for a wide array. And perhaps what is meant by custody is really like the static custody, whereas the transfer is something which implies also a dynamic transferring from one address to another.
I guess the question is to what extent, if you're a pure technology provider, right, where you're just providing some component of the transfer, you don't have custody, maybe you're providing just an interface, between two parties. I guess it could capture that. That would be a pretty broad, almost a vendor interpretation.
Yes, this is, as I've said, there is this recital which I invite you to read, which is 63D, according to the version that I have, and it basically excludes some players, but it does not include the validators, nodes, or miners that may be part of confirming a transaction. Even though like they offer some kind of crypto asset transfer service, for example, custody and administration of crypto assets. So it tries to make a distinction here, but I think, as we said a lot of other times, like there isn't the willingness of pointing to the technology intended as the blockchain, nodes, miners, and everyone that contributes to the validation of the transactions. But I think that like everyone else could be in danger, and also the examples that were made by Alrisa could be catched by this. That's true.
Just to maybe to add something about what Francesco just said about especially about the infrastructure, like the layer one, which most of it don't fall within the scope of the regulation. I think it's understand to recall that and to keep in mind that of course this regulation actually target the intermediaries between like the people, like the legal entity or the individuals, and a service provider. So of course, when you are providing like only a tech, like if you are only a tech services, or if you are like, for instance, if you are the subcontractors of a service that is offering the service to the end user, you don't fall within this cap. The most easiest example to understand, it's like the custodian, like the most of the crypto custodian, such as Fireblocks, Ledger Vault, and I probably forget a ton of them. They are not regulated because they are offering the services to I don't know, Binance, Kraken, Coinbase, and so on. And these services are regulated because they're offering a custodianship services to you and me, you and us. And it's very important to keep in mind because in the crypto world, sometimes we have a very tech approach to the we try to have a very technological approach to the regulation, and to forget that it's only this interface between the market and the crypto which is regulated, and all the infrastructure, the tech, the back office is not regulated yet.
I think just to add again, I think it's very important when we think about what is infrastructure. So is infrastructure, again, only layer one, or is it something that is like MetaMask and Ledger, what you just mentioned? And I think that going back into the definition of what is a crypto as a service provider is going to be vital for all these, in a way, projects to look into what they need to be compliant with. And there are two other things. One is we have a definition of crypto as a service provider, but I think what is also important, and we have seen that this is happening right now, which being implemented in maybe some other regulations, is what is the definition of a virtual as a service provider in the FATF recommendations. So this is something that regulators as the European Union and others are of course observing. And I remember when the members of the parliament said that, for example, the transfer funds regulation is one of the most ambitious implementations of the FATF recommendations in the European Union. So that is also something that I think we need to look into. And the second thing is there are new regulations and new directives coming up that might be linked to some of the similar projects that we are now just discussing. So we're having this AML package, but also the DAC 8 directive that is basically defining the way how member states should exchange information regarding taxes. And in this directive, at least one of the drafts, we see that the crypto as a service providers are defined in a different way from what we see in MiCA. So just understanding what MiCA does and how it regulates crypto as a service providers will not be enough for all those projects in the future. They will need to look into specific regulations too.
So I would like to add on that. So you're absolutely right, Marina. Even inside the Red Sea you can see that MiCA is referring to FATF and saying that for us, the recommendations of FATF and the ongoing recommendations of FATF are very important, and even says when analyzing a business, please always also look at the FATF recommendation. Therefore, I'm absolutely with you. And William, what you just said regarding, you called it the back office service providers, which are not regulated because they provide the services to the CASPs. We have a similar positioning in Germany. So the German regulator actually provided lots of material on the regulation of crypto asset service providers. And there's a clear understanding by the German regulator, which I understand is also something which the MiCA and the other member states back, is that if you have someone who's providing either technological service or even hardware, not just software services, they are not covered by MiCA as long as they do not have access to the private keys and they do not have access to the key recovery phrases in the key recovery package. So you mentioned Fireblocks. You're absolutely right with that, because Fireblocks is having an MPC solution. So it's a SaaS solution, a software as a service solution. So anyone who wants to do trading with crypto can get this license to use the SaaS solution of Fireblocks. And then the one who's using this service of Fireblocks, this person has access to the crypto assets and to the private keys. In the case of an MPC, the private keys, they're just produced instantly when you do the transfer of the crypto assets. Therefore, there's no possibility of Fireblocks to having access to the private keys. This is one thing. And if you then look on the hardware devices, for example, what Metaco, a Swiss company, is doing with HSM, so their modules which they produce, there you have also again to look at, are these modules, these hardware modules, lying with the bank and with the service provider? Is it like on-premise? And do they have the key recovery information? And if this is true, then the ones who are providing the services, it could be also a cloud service like with IBM and Azure and so on, they are all non-regulated, they're all non-CASPs, and the others who use the services, there would be the CASPs.
We talked a little bit about the carve-outs. Do you think there's other gray areas in terms of the definition?
Yeah, so I didn't want to start this discussion because I thought that it's going to be a big discussion in our talk today. Decentralized finance. So this is a big carve-out. It's a major carve-out. And this is something I think which is very interesting to the entire market, because I think DeFi is growing and growing. And I think we all agree that DeFi is out of the picture, and maybe MiCA 2, so MiCA 2.0 is going to cover DeFi. And but this is very interesting to look at what MiCA is right now saying about DeFi. When is DeFi not covered, and when maybe DeFi products are covered, because this is also written inside the MiCA. And the wording says if you have a legal person or a person which where MiCA would apply to, then MiCA applies. But if we do not have a legal person, and this is the problem actually what we have with the definition of DeFi, when is DeFi really decentralized fully, and when is it not decentralized? That's one thing. And then, but what also MiCA says, if you have a token, for instance, so you have a DeFi network and there's a token which is issued, and some CASP wants to trade with a DeFi token, then the DeFi product is regulated if the CASP inside the European Economic Area is letting this DeFi token being traded or providing services for such DeFi token. Then again, it's covered. So, but I would also like to hear from my co-speakers what you think about how we should understand DeFi. So when is a decentralized network, or maybe a decentralized autonomous organization, decentralized in a regulatory sense by maybe looking at the voting rights and shareholder rights or shareholder positions. We have like this control definition and definition of a mandatory holding and stuff like that. So what do you think?
So that's of course a super important question, and I was super worried about this problem when there was the definition of DAO in the MiCA that then they have excluded. Now we have two elements that to me are important. First of all, there is the fully decentralized, which it's very difficult to, as we know. We have also to bear in mind that like MiCA does not cover like all the activities that are made by the customers on its own initiative. And so like I can feel that DeFi presents itself in a way which is not an invitation to so this is, I think, if DeFi will maintain an approach which is very cautious, like not using the languages of the European nations, which actually it's not done by a lot of them. I think like this could be avoided altogether because DeFi projects do not have a permanent establishment in the European Union normally. And so like I think that there is a kind of indication of how you could avoid all the application of these rules for DeFi. But of course, like the problem of fully decentralization remains. Let's imagine that we talk about a project that is European in nature, a DeFi project, and we have some in France, especially, I would say, like how does this project deals? And I think that there we have to look at the recital fully decentralized. I would say it means that first of all, you don't need an entity which pays dividends. This would be tremendous, I would say. And then the voting rights have to be quite distributed. In what sense is different to say? For instance, we have a good article of Mark Boyron, who is a known crypto lawyer in the US, who theorized a bit like what does it mean to have a sufficient decentralization. And like there isn't a direct response on this issue, but the important thing is that you need not to have a central entity that controls. Like he puts this number, which is 10 different points of decision making spread a bit all over the world, and plus you have to add on this also the. But of course, like it's something which must be seen. What I get from this indication is just that basically you are saying that there is something which falls outside of the scope of application no matter what, and it's the true DAO. But I would carefully say that it's better not to offer this DeFi project through the front ends to European customers, like having always a very careful approach, not using Italian, French, or Spanish, which could be one of the signals that you're offering in these countries. And yes, I would, if you apply this approach, I would say that it's difficult that they're going to enforce MiCA against this play as it happened in the United States on the basis of the rules that we have.
Yeah, I mean, there's sort of an ongoing debate in terms of front ends. You know, I think there's a recognition that a lot of the back end processing for DeFi, you're just simply not going to capture by any regulation, US included. And so then, you start to get into these difficult questions like who's regulated, because how many pieces of the puzzle are spread out amongst different players, and then who has responsibility? The SEC in like a Reg ATS last year, when they were talking about a revision, again, this sort of is a US CASP type questions, they raised this notion that you could have multiple operators that could collectively form an exchange, and each operator would be regulated. So each piece of the puzzle would be subject to regulation, which was snuck in a footnote, and a lot of people really reacted strongly against, because then you get into are developers responsible? So it's the decentralization is questioned because to the extent you regulate it, you can easily just break apart the different components further, or further disintermediate, like front ends, you could have it pulled off of like a GitHub or some other, where you're plugging in yourself. Or there's also Urbit, which is an ecosystem where you can't really identify any particular centralized actor in any way, shape, or form. So it's a little bit like whack-a-mole once you start getting into these questions. And I think, again, I think both in the U.S. and in the European Union, I believe I see like a reluctance to be too aggressive in sort of addressing this because, number one, the size of the space, and number two, just the challenges that it raises.
I think what's interesting here, as you mentioned, is that first, there is no legal entity, for example. We have seen, I think in Europe, we don't have any specific definition that I have seen of what is decentralization or sufficiently decentralized, except from what was mentioned already in MiCA. But we can see, for example, what happened in the Netherlands when it comes to Tornado Cash. So in these cases, it's not directly linked to MiCA, but at the same time, it's kind of helping us understand how the prosecutor sees the role of a person that can be a contributor, that can be a developer, but could also have, in a way, managerial effort into what was happening at the specific time. And I think that, in a way, at least in that case, there was a connection to their interest of the specific contributor to the higher price of the token versus how they were offering or how they were developing this specific product. And I think what's also interesting, what happened this year, we had quite a lot of events happening in the US with the UkiDAO. And I think that was one of the most important, at least to date, feedback from the US on how they understand DAOs and decentralization. And in that part, even any type of voting or any type of activity from one person would mean that they are in a way involved in this entity. That can be a DAO or that can be an incorporated partnership. And I think that could be really devastating to the ecosystem if that would be true also in Europe. And in this case, just at this moment, the Law Commission in the UK is also asking the industry, the community, to get some feedback on understanding better DAOs, what DAOs are, and if there would need to be something like a new law on DAOs. And we see all over also the US, new states looking into having new laws for DAOs. So I think that in a way that's not just financial regulation, is also looking into how do we regulate, how do we define legal entities.
We'll pursue, I think, DeFi a little bit more on our next episode, but maybe we could start to move toward the obligations of the CASPs.
Yes, okay, we can. There are a lot, so please help me. I will begin a bit, and then we can discuss about the issues. First of all, you have to be located in the EU, which is held as important. We have this element also in other cases. There is the willingness of having hard bases in the EU in order to exercise some oversight and control over an entity which is existing, and so it's not possible to apply from, Asia and get the license and then operate without having an establishment in the European Union. So this is the first requirement, which is important. And on this, you need to basically ask for an authorization. And also here we have a very, very long list of information that you have to give to the authority. And the authority will control on the not only on the type of activity that you want to provide, but also on the substantive capacity of performing this kind of service in a way which is, of course, safe for the users. And apart now from the single requirements also related to the capital that you have to have or other aspects, I think that another important element is the fact that there will be also a control over the people that decide, that are within the governance of the CASP, which is also something that we have in financial law but basically there is also a scrutiny about the real capacity from a professional point of view of running this type of dangerous business. And so the first step is basically this very long list of indications that need to be provided to the authority. Then the authority has 40 days to respond and to say whether it fits with the conditions set by the regulation. And here I ask to myself, because I see that nowadays for the countries that have already implemented this kind of rules, it takes a lot of time. Whereas here, my feeling is that they want basically to implement a system which must be faster in order to get a response in a way which is very, very faster. Once you get the authorization, you can start operating, and then basically you have rules concerning the control of the CASP, which is provided in the first place by the authority of the country in which the CASP operates. But then there is also like a European level in which ESMA and EBA will also intervene, and so rules concerning this supervision. And yes, now I think we can also enter a bit more into detail with the rules, perhaps commenting on something. But that's basically the skeleton of the rules. It's not so new, and it brings basically to have some people that take the responsibility and that have a recognizable position within the European Union.
So I would add on that. So once you have the license, it's not over. You have to make sure that everything you did to receive the license, which, for example, the fit and proper tests of the directors of the company and so on, this has to stay also ongoing, looking forward for the business. So you're not just doing it once to get the license. Ongoing business has also always to make sure that everything you did to get the license has to be the same. And then when we look at the obligations which the crypto asset service providers have, we differentiate between the obligations which are there for all the crypto asset service providers, so the general obligations, which are in Chapter 2 and Article 59 following. And then we have specific obligations for specific crypto asset service providers, such as for the crypto custodians. So I'm just going to pick on some of them, and I think we're going to talk later about some specific ones. So the general ones, for example, they are the obligations to act honestly, fairly, and professionally in the best interest of clients and information to clients, and so on. There are some further general requirements, such as prudential requirements. There are requirements to inform the supervisory authority. There are specific requirements to when you wind down your company and stuff like that. But then when it comes to the specific requirements, I'm just picking on the crypto custody service provider. It is very interesting to see that the crypto custody service provider has some certain obligations where we see that this is very important when we look at the most recent incidents with the crypto exchanges and crypto custody service providers, such as the obligation to ring fence the assets of the CASP from the assets of the client. So ring fencing the assets to make sure that in case of insolvency, the assets of the CASP are ring fenced from the assets of the users, and the assets of the users are not going into the insolvency proceeding, and they're covered, they're protected from that. And this is something what I would say is very interesting to see. And this also we already have in the general obligations, where it says the general obligations of safekeeping of crypto assets and of funds of the users. And I believe this is a very strong list of obligations which the CASP are going to have.
Does that ring fencing apply to like a bankruptcy or insolvency analysis? Would it be governing?
Yes, this should be the case, because it tries to avoid the commingling of the assets, which we saw is so dangerous in these cases. And yes, I also agree that this is a very important point. And yes, of course, like if you read to act honestly, fairly, it's something which is quite generic. But of course, the idea is that the first interest should be for the clients. This is something which is absolutely true. Then there are requirements related to the minimum capital, which is not enormous in my opinion. It's like 125, I think, in general, and 150 for trading platform. not enormous, but we have to be aware that nowadays we have a lot of companies in the EU which basically every time have a minimum capital required by the law, which can be, for instance, in Italy, it's 10K. And so you don't have solid companies that operate a service, which is very, very dangerous. What I also wanted to add, because custody is, of course, important, there is also here, like the indications are quite generic as to the, of course, type of technology, but there is the indication that also the IT services and technologies that are adopted by the CASP should be of first level. And within this first communication that is provided to the authorities, there must be also the indication of how they basically organize their activity from a technological point of view. And so also this will play a role, although I think that there will be best practices for the person that asked for the authorization, but there's also the willingness of entering a bit, not only on the organization with respect to the personal part, but also like in looking how they organize their activity from a technological point of view, which is, I think, challenging because the technologies are quite new. And if we imagine that a lot of also traditional players can access the market, I think that there will be more scrutiny than now and more transparency.
I'm going to actually just circle back to insolvency. If keys are on an exchange, you may see it in your account, but if you're dealing with a centralized exchange, they may keep their, the assets on another exchange, because that's the way it's typically. So if that ultimate exchange goes under, it can impact your ownership, despite the fact that you see it in your account. It isn't really segregated, and there's certain things you can do technically. For example, you could ensure that those assets actually have to move through like a Fireblocks implementation or to a third-party custodian, and that custodial relationship or that Fireblocks relationship where you are a signatory, you being the user, the client, is a signatory to releasing those keys. That would be one way of segregating it. But otherwise, they would tend to be there could be an accounting mechanism where you're treating those keys as running to the particular user, but the segregation isn't really happening. They could be held on an omnibus basis. They could be held at the exchange. This is largely record keeping, but it doesn't necessarily, in the context of a bankruptcy, there are omnibus assets where, like, if I'm a customer and you're a customer, then we share, we may have claims on the estate, but we may not necessarily get it. It also further complicates it in the US with state law, because certain states recognize property differently. Just curious how you think MiCA would or wouldn't address those types of questions.
So maybe just start, and you, my co-speakers, they just add on that. So the MiCA is, I think, very thought through, because the obligation of segregation is not just applying when you set up the wallets. The MiCA says specifically you have to make sure that the segregation goes through the entire operations of the custodian, which means that if you take the example of Coinbase, we all know that Coinbase did a filing last year with the SEC where it turned out that there is a trading wallet where the assets of Coinbase and the assets of the users are getting mixed up when they're doing some trading. This is meant by you have to do the segregation through the operations. It means not just when you put up the wallet, when they put their assets there, also when you do trading, never mix up the assets of your users with the assets of the crypto exchange. And to my understanding, at least in the European Economic Area, this is important when it comes to the insolvency estate. So if the exchange is becoming insolvent, only the estate is covered where it's clear that it belongs to the exchange. But where you have really a segregation, where you say this all belongs to the users, any insolvency administrator would not touch that assets, because there is a right of segregation by the users, and so it is not covered by the state. And I believe that the MiCA is very thought through. The MiCA could have also done something different. They could have just copied the Investment Services Directive, because under the Investment Services Directive, as a custodian, you're only either allowed to do custody or trading. You're not allowed to do both. So you would need to have two entities if you want to provide trading and custody. This we all have in Germany right now when it comes to crypto trading. So you always need to have two entities. One entity which is taking care of the crypto assets in sense of custody, and the other entity is allowed to provide trading services. But MiCA did not go this way. I don't know why, but this allows you theoretically to be custodian and provide trading, but then you have to make sure that from an operational perspective that you have segregation till the end.
Great. So, Alexandru.
Yeah, just a point here. In a way, just to complement Alireza from a common law perspective, and to bring to your attention that there is a very good decision, even if it's not from the US but from Australia. But basically, it goes into the theory of holding in trust. It stems from the hack of Cryptopia. One of which was hacked in 2016 or 17, and afterwards, of course, we've seen other hacks and other estates being built and bankruptcies. And the judge makes a very good distinction of what is held in trust and what is held in the state of the crypto exchange, with some interesting variations across the UK, Australia, and even the US. So for our listeners, I really found that a very good decision from the Australian judge.
Yeah, I also want to add something on this because, like also as Eric has said, like in the end, it's a like private law question. What do we have? Is it a property, or who is the owner? What custody mean? On this, we have also like this new UNIDROIT principles of digital assets that perhaps are not like super comprehensive, but they define a bit what is meant by custody, actual control. And so it's interesting because it's like they provide definitions which should work for common law and civil law legal systems. My feeling is that also here, like the entire system which deals with crypto assets and CASPs is going in the direction that the ownership is on the user and not on the crypto exchange. I say this also from the perspective of taxation nowadays, and like holding crypto assets for like as a owner for an exchange could also be like dangerous for taxation repercussions that may arise. For instance, in Italy, we have now new rules on taxation, and basically they take also into consideration the the case in which the crypto asset service provider holds on behalf of the client. And like if you look at this rule, they make clear that basically the ownership is not on the exchange, but that they deal just with the custody. Then, of course, like one has also to look into the provisions of the general terms and conditions. My feeling is that also normally they go in the direction of custody, but it's not always the case. So I don't remember exactly, but there was a study made on the provisions of the American US exchanges, and there was a big inconsistency with respect to how they define the relationship between the clients and the exchange as such. My feeling is that in the European Union, you're very careful to distinguish between the spheres of ownership, and you make clear that the relationship is just custody on behalf, which is so a personal relationship between the CASP and the user.
So there's a number of obligations that we can address. I'd like to sort of walk through these obligations.
We can take them one by one if you want.
Yes, let's do it.
You already have introduced at a high level like most of them, but I think first it's important to understand that there is like regarding the obligation to get the license, I understand that there is like 3 categories of obligation. We have talked about the equity requirement or the insurance of the asset, which is either one on another. This obligation, like of course, aim to protect the asset of the client, and we recently have unfortunately see some very critical example of this asset protection. You have another kind of obligation which focus more on the cybersecurity, which have to be understood in line with the DORA regulation. So the idea, if we want to keep it simple, is that the MiCA asks the CASP to be in position to ensure that the IT system are safe. So you have to be audited regularly. You have to organize some pen testing, like white hacking of your system. You have to anticipate like a failure of your system. So maybe we will talk more deeply about it later, but the idea is to reach a level of cybersecurity which is the same as the other financial intermediaries, and which will be, if DORA works well, it will be a quite high level of cybersecurity. And the last group of obligation are more traditional. It's about, of course, the fit and proper of the significant executive and the significant shareholder, but also a lot of obligation about how you are conducting your business, following, of course, what we ask to, like all the other financial intermediaries. You have to prevent conflict of interest. You have to ensure the best execution policy of the order of your client. You have to provide like a fair and transparent commercial documentation to your client. You have to offer your client a way to complain and deal with this complaint in a like properly and a professional manner. There is probably more obligation I forget, but I rely on my co-speaker to conclude. And of course, this is what you need to do to get the license, but after, as it already has been said by my co-speaker, you have to keep this level of compliance, and we all know that the level of compliance will gradually rise as any other any other license everywhere in the world. Like the level like slowly rise year after year. And lastly, you will be supervised by your local regulator. So if you're in Germany, it will be the BaFin. If you are in Belgium, it will be the Belgian regulator. And this regulator will have much more power to supervise you, because it's one of the limits of the current system when you have registration, is that there is no such a thing that the regulator can ask you to ask you to provide, and the regulator is sometimes a little bit like harmless in front of like non-very professional behavior, but still not illicit behavior. Yeah, it was very broad presentation, but I let Alireza continue.
Oh, thank you, William. I just wanted to add some things. I mean, it's very complex to get a license. We see it already when you apply for a banking license or for an investment firm license. So the MiCA license is not different from that. And one part which many people don't know or don't see is that no matter if you apply for own license or if you try to acquire, so to try to buy a licensed entity, the shareholder control procedure is something which is very difficult. So the shareholder control procedure means that the authority will check who are the shareholders of, who are the becoming shareholders, who are the shareholders behind the company which applies for the license. So the authority wants to understand who are those who have the mandatory shares. And mandatory shares means anyone who has more than 10% shares, voting rights, or capital shares. Actually, in MiCA it's 20%, but for banking and for other institutes it's 10. So let's say 20%. And so the regulator wants to make sure that these persons, they are the shareholders, so the major shareholders, they are fit and proper themselves, which means that the shareholders should not have done any criminal activities, especially when it comes to anti-money laundering and also anything which is in relation to insolvency. And this is also the reason why companies such as BitMEX did not succeed to buy a regulated bank in Germany, because they intended to do some crypto business in Germany and they intended to buy a fully licensed bank, and they could not do so because some of the main founders of BitMEX, as we know, they had some proceedings going on against them in the US. So, and what the regulator wants to understand, where is the money coming from which is invested into the business? So if the money is coming from somewhere where you do not have some clear paperwork, so you cannot demonstrate you have some tax income or some tax confirmation for that money, then you cannot use it to invest it in a company, to open up a crypto company in Europe. And this is also something which is very important. And this is also the reason why you cannot just come and say, I'm a very successful crypto player, not regulated, so I have sufficient funds. I'm just going and buying some regulated institute. And this is not going to work in the future. And this is, I think, very important to know.
Excellent. And also, amidst all those obligations would be market abuse. So what are the requirements? What are the applicable provisions regarding market abuse for CASPs? And how does it differ from like MAR? And maybe you could sort of contrast the two.
If you look comparatively at the market abuse regulation and the MiCA abuse regulation protections, the type of prohibitions are pretty much similar from the get-go. So, on the face of them. It's also worth mentioning that MAR as a regulation was basically created for consumer protection and prohibition of insider dealing and disclosure of information for transferable securities. So the MAR is very much linked to MiFID II in Europe and what's a security. So from this perspective, we don't see directly a conflict of the two unless we get to a point where a crypto asset will also be a security. And again, it will be a sort of a discussion on what's the supervening regulation being applicable. This is from a theoretical point of view. But then if you look at the prohibited activities, they are very much similar. So it will depend a lot on the specifics of the case, where let's say MiCA will be covering some aspects which are not covered by the market abuse regulation. And just to we can get afterwards more into the MiCA specific prohibitions, but just would be the overall framework in which to consider the MAR and the MiCA.
I think just to add something about what Alexandru just said, this is maybe one of the most important part of MiCA in my opinion, because it is something totally new, like this market abuse regulation on the crypto asset market. And it's something that I think the crypto asset market, unfortunately, needs this regulation quite a lot, because we have seen a lot of proof of evidence that there is like wash trading, insider dealing. Even some people on Twitter are very proud to do insider dealing and insider trading in the market, in the crypto asset market. And it's something that personally I'm very almost excited to see how the regulator will adapt what exists for years now on the securities and on the financial instrument market to the crypto asset area. I believe that they will start, as usual, they will start very like slowly and with maybe the most basic obligation, but it's something that will, I believe, like really change the face of the crypto asset market in the next 5 to 10 years, and allow a true democratization, because you can regulate everyone around the table with the CASP license, for instance. If these people, they are not controlled on the behavior they have in the market, you will never truly have a fair and a transparent market. And it is what exactly like market abuse is about. So yeah, it was just my two cents.
Right. And I'd imagine that maybe that's an area which generates a lot of rulemaking at the local authority level, but Ali Reza.
Yes, I mean this is also something we touched on the last recording. So when you look at the white paper and you look at an ICO, what we nowadays see is that you have ICOs and then you have this pump and dump activity. So you have a coin which is basically worthless, but then a group of people around the issuer, they just start pumping that coin and pumping the price, and then you have groups like Telegram channels where people just write there, yeah, the next big thing, so invest in this coin. And in the end of the day, it's a circle of people around the issuer who just try to pump the coin and then to get out, yeah. And something like this will be not allowed in the future, and this will be prevented by also the insider trading prohibition rules and other rules which are going to come. And I think you have to read the white paper together with the MAR and the market abuse regulation inside the MiCA and the insider trading prohibition together, because then you understand that this is basically giving lots of protection for the consumer and for the one who's going to buy a token, which is coming from an ICO, from a token generating event. And therefore, I think that this market abuse and also the insider trading regulation coming with MiCA is very important to the market, and is going to cover something which is so far something very dangerous for those who want to invest in crypto and have no knowledge at all.
Fully agree on Alireza's and points, and just to give also a bit of flavor, together with Alireza and some of our colleagues from the Think Block Tank, which again it's an organization of European lawyers. Back in 2019, we had this debate, and we even issued a working paper on token regulations in Europe, and we covered the market abuse regulation. And based on the debate, even if you have a sort of unless it's a fraud, so like a sort of a rug pull, all these activities of pump and dump were not regulated across Europe in order for the market abuse regulation to catch them. So they were outside the scope. Whatever would have been in normal terms in a normal trading environment, insider dealing or sort of market manipulation, for the crypto, it was still the wild west. So from this perspective, MiCA, with even if it's not the most innovative, let's say, text in the MiCA, it does provide and covers this gap, which was previously part of the crypto market, to be honest.
Yeah, and maybe absolutely in line with you, but it will be much more productive than only to the consumer, because it reminds me something what happened like 2 years ago. I was assisting a client in a case where like there was an insurance that was about reimburse a huge amount of damage happening in Ether, actually, so in crypto asset. And on the middle of the negotiation, so we have asked a lot of expertise, like on the technical side, but also on the economical side. I think you probably understand the context. And at the middle of the negotiation, we realized that we didn't. It was very complicated to find a trustful source of information about the price. Like the price of the Ether, you rely on what? On CoinGecko, on CoinMarketCap, but CoinMarketCap, it's an average of pricing from some very serious exchange. I don't know, for instance, Coinbase or Kraken or even Binance, even if I'm not 100% sure about Binance. And you have also the price of Ether at this time come from a lot of offshore exchange, and you are absolutely not sure if there is not a lot of fake volume and wash trading and so on. So even to have this mere information about the price of Ether, like in 2019, it was approximately impossible to have some. And when we were talking about, of course, about hundreds of thousands of euros of difference between the different source of pricing, so it creating a new negotiation within the negotiation. And it was for me the first time I realized that it's not possible in a market. It's not I don't know. It's complicated in the market when you don't have this market abuse practice preventing, because you are not sure about even the price of an asset. So it's a huge factor of trust for everybody around the table, consumer, of course, regulators, but also like market player, or even if you are, I don't know, a lawyer during a negotiation with an insurance.
If I may, Rick, on this one, what William was mentioning, I got this situation as well. Even for contracts, it's sort of establishing a sort of a international or European benchmark for the price of a specific crypto asset. And what we tried to do in Romania, we've seen that there was some public information that the Romanian authority seized assets from illegal activity, and they were doing an auction on some bitcoins. So what we tried to, and they were like providing a sort of a price, and the idea was like, based on what are you establishing the price? So for that, so in order for us in Romania to consider, their methodology as the best legal approach, but unfortunately, I did not get a formal reply. And then in some cases, we basically advise clients, let's just look at crypto regulated exchanges within the European Union, wherever they have a license, and we'll do a sort of a weighted average between the prices based on a couple of exchanges. That was it. But it was, nothing legal, but mostly, a practical point. But this is indeed, it's important for what's to be considered market manipulation, because you'll need, some benchmarks and standards.
Maybe another topic to touch on, and again, we can put this in a different order, but liability. We had talked about this on the last podcast about an issuer liability, right? The obligation. But in the context of a CASP, what is the CASP's potential liability under MiCA?
If I understand well your question, Eric, it's about what is the liability of a CASP if something went wrong for one reason or another?
Cybersecurity, cyber attacks, thefts, malfunctions.
I mean, whatever the threat come from, inside or outside. Yeah, but basically you have as any other regulated financial intermediaries, you will have like 3 levels of liabilities. 2 levels that are common to anyone. It is the civil liabilities and the criminal liabilities. So civil liabilities, it's if you are creating a damage, you need to answer about your bad behavior or your wrongful or your misconduct. It's common actually. Criminal liability, you are of course personally as an exec, but also as a company, you can be subject to criminality charge. Which is interesting for CASP is you have the normal criminal infringement, but you have also this new criminal infringement who come from the market abuse practice prevention. For instance, market manipulation, insider trading, and so on. So it is a new level, a new category of crypto white collar crime activities. And you have the last stage, but which is the most important regarding MiCA. It will be the administrative liability. So it will be the liability between you and your regulators. So the regulators will supervise you and will ask you information and will ask you to basically comply with all of the obligation of MiCA. For instance, regarding your communication. Regarding if you change your shareholders, if you are not segregating the fund of the asset of your client, and so on, and this is the most direct, the fastest way and the cheapest way, if I may say, because it's free. Nobody has to pay a lawyer for it to make sure that the CAS will follow the rules, and of course the regulators, you have the ability. You have a huge range of sanctions But the three main one, he can do name and shame actually. So he can say that you are not following the rule. He can creating a sanction, even a very small one, but make this sanction public. He can of course pronounce a fine, which can be relatively expensive. It can be $millions or dozens of millions of dollars. Or if you are a very big actor, for instance, regarding the market share of Binance, which is registered in, I don't know, like 3 or 4 countries. When Binance will be regulated under MiCA, the regulator of Binance will have the ability, given the size of Binance, to pronounce a huge administrative fine if Binance, of course, can be held liable for something. It's very similar to what happened with Google and Facebook, for instance, under the GDPR. And of course, the last shot, it's the regulator can basically exclude you from the market if they withdraw you your license. It's not happen very often, but when it happens, it's like the red button or the atomic bomb, I don't know. And so this is regarding the CASP. And of course, the regulator has also a lot of power about the people who are not licensed, but who fall within the scope of its jurisdiction. So of course, we are talking about all the foreign actors or all the offshore players that would like to target the European market after the entry into application of MiCA.
Just to add a very interesting liability, I will be very short. It's about in case an exchange, for example, we discussed this in previous episodes, but in case an exchange would like to list on self-initiative a specific crypto asset, they would write the white paper in this regard, and also for that white paper and the information there, they will be liable, except from some kind of information is also sent to them by the offerer. So that's just a very interesting example.
There is a huge variety of risks. So, William tried to sort of create a framework for assessing this. What I will be just to add on cybersecurity. At the European level, we have the NIS directive, which treats cybersecurity from the perspective of essential services within an economy. One of the essential services is, apart from water, public transportation, it's also financial services. Depending on whether crypto at some point will be categorized as financial services, specific obligations on cybersecurity and contingencies and preparing a sort of a contingency plan and all sorts of other obligations stemming from the cybersecurity rules in Europe will be applicable. A second area which will be covered, highly probable, it's not in MiCA, but we need to take into account data breaches, personal data information breaches. That again will be a very important risk to be covered. And then on the specific market abuse and insider dealing prohibitions, what I like to add is the fact that MiCA for CASPs provides a sort of obligation. So whatever it's an obligation, if you don't comply with it, you'll have not only administrative fines, but also private enforcement stemming from those. So, for example, you will be obliged to disclose insider information to the public with a couple of exceptions. One of those is if the delay of disclosure will not mislead the public. But then again, it's very much left in the in a gray area, unless we will have some ESMA interpretative rules on this point. Another point of prohibition, and I think here it's an interesting situation, is the fact that you don't have you have a sort of a flag approach. So prohibition of market manipulation. There are a couple of market practices which are strictly prohibited, and those are sort of red flags. But then also MiCA comes with, and I think it's in Article 80, the second paragraph. It's a sort of an orange flag where those might be prohibited depending on some fact-specific circumstances. And then also in those orange flag situations, you might have all sorts of potential liability risks because they are not 100% prohibited. They are, in the middle. Thank you. That would be on my side.
So I want to kind of circle on the cybersecurity aspect for a bit, and maybe taking a step back on possibly one of the bigger burdens under MiCA. So, let me frame the question a little differently. When you look at the obligations of CASPs under MiCA, where do you think the biggest lift lies for the CASP providers? Would it be the cybersecurity controls? Would it be the market manipulation controls that you'd have to be in place?
So I would go in the same direction as you just started, Alexandro. It really depends whom you ask. If you ask some company which is coming from the crypto industry and is very active in crypto and really understands cybersecurity, IT security, and is really mastering every level 2 application and so on, I think for such a company, complying with the IT security obligations, it is not a big deal, and if they really understand how to do it. But it may be difficult for them to comply with financial regulation because they never did something in the financial industry. And therefore they will have problems to comply with financial regulation, and also to maybe find the right staff and the right personnel for doing the job because they're coming from the crypto environment. And the same or the opposite applies to if you look at the bank or if you look at the traditional financial services player who now starts to do crypto. If you would go to a bank and tell a bank, look here, the MiCA allows you to do any kind of crypto custody or crypto services because you're allowed to do so without any further license. I can bet with you that 99% of the traditional banks would say, I will not touch crypto because I don't have enough clue on how to do crypto custody, IT security, safekeeping of private keys. I don't have a clue what MPC is and what Fireblocks and so on means, and therefore I cannot take care of that. And this is, I think, the biggest issue for the traditional players to get comfortable with the crypto activities and everything related to IT security. And they will also have difficulties to find the right people for the right job because if you can imagine or face like an older gentleman from Deutsche Bank or from Commerzbank, which is above 70 years and now has to run a bank dealing with security token trading and Fireblocks and algo trade and whatever, they will of course not understand how to do it. But the managing director of such a bank is ultimately responsible and liable for the activity of the institute. Therefore, this is very, very, very difficult for a traditional institute to suddenly run crypto activities.
Well,
of course, I agree with Alireza. I will stop to say that I agree with you because it's very repetitive. we are so polite and nice in this podcast. I think it's exactly depends of who you are, whom you are. There is, I think, maybe 3 situations. You are a big actor, with well-funded, with already like a compliance services and a small team of legal people inside. I think the most difficult part of MiCA will not be technical or legal. It will be like the cultural shift that it will be required by the crypto industry. Proposing a saving wallet or yield product or DeFi product without asking anything to your in-house lawyer and without being under the scope of a regulator will be the good old time. It will be terminated. You will become a very regulated fintech, and I think the hardest part will be the cultural shift. If you are a new actor who want to work with traditional finance, and you are like, I don't know, you come from the traditional finance, MiCA, it's absolutely a good news because it's just like we just creating something which look like very much to what happened in the traditional finance, So, and if you want to work with the traditional finance, MiCA obligation is just the minimum requirement actually for them to, to have the same level of compliance. And lastly, if you're a small startup, of course it will be costly, and it will require not only time and cost and money, which is something that a lot of startups don't have very much, especially right now, but it will only imply you to be able to have the human resources and the intellectual resources to deal with this kind of process and to deal with the regulators. And unfortunately, some of the current market player right now who are under the radar, or who are very small and quite, like we would like to do things very quick and dirty. But the new area that will be opened by MiCA will be like not very favorable for them. So yeah, this is my answer.
I think what we also need to look into, as you, William, already mentioned, is the small startups or the small entities that might not be able to finance the whole operation. And on the other side, looking into the investors, they will need to start looking into, okay, I need to invest more for this startup because they will need to comply with all those rules and they will need to do it on a long term. And I think that at the same time, it might be a little bit harder for those small entities to basically enter the market again, to be a big player, versus the maybe established banks or established companies already that have this capacity, and will have, as we all know, all this regulation will have a major shift in the whole ecosystem. And maybe not only when we discuss with MiCA, but again, in Europe, I think the transfer funds regulation, AML, those will be very, very important in the future too.
So on that point, I want to return back to the 18-month period post, I guess, the implementation date. And again, just assuming that you already have a framework in place for CASPs as of the implementation date in 2024, then there is an 18-month period to affect compliance. You can jump in if I'm misstating it. If you're like a startup where you're trying to ease into the regulation, it's actually a fairly good time to, right? Because you're able to start and while everything's being figured out, you have this transitional period. What's intriguing is once you pass this transitional period and you get, as William would put it, that layering of complexity, right? But what are the implications when, past that 18-month period for a startup that is looking to enter into the space, but really, I guess needs training wheels? Is it like you better have, like in the US, like you better be completely ready when you're licensed, or is there sort of a small firm compliance guide? Like, so in the US, for example, like a smaller broker dealer, the SEC, when they release certain rules, they will have they will do small firm requirements. So it gives small firms guidelines for how they comply, so they're not looking at the large firms and trying to comply with those requirements. So in that way, the FINRA actually, it actually facilitates small firm compliance because they're not looking at the enormity of the broker-dealer space. But is there, and I know it's early stage and some of this is still formative, but what do you think the implications are for these smaller firms after this 18-month period when they've, they no longer have the training wheels? William?
Two things. First of all, MiCA, I think the level of expectation, the regulator will not have the same expectation from a small firm, like for instance a small startup that it could have with a big crypto exchange or traditional actors. But still, the most of the requirements are the same. So it will not. I know that there will be some like specific provision for like systemic actors or the very big one, but I mean between I don't know, a 5-people team and a 500-people team, the requirement, like most of the obligation will be absolutely the same. And of course the regulator, and we already saw that because when we are talking about the registration right now, which is in place in most of the European country, most of the regulators they not ask exactly the same to a small team than to a large one. but I let, of course, my co-speaker add things on this part. And the second thing, what about the calendar of MiCA, like the timeline of MiCA? Of course, there is a huge, almost a clock race right now for some people to ask to be registered. If you can, for instance, if you're a foreign player in London or in the US, if you know that in 2 or 3 years you will be in Europe, ask yourself if it's not clever to ask very quickly a registration to get the benefit of this 36 period to get the MiCA license. Because if you wake up in 1 year, it will be probably too late in several, at least EU country, including France, and you will be like from the beginning in the track to get the MiCA license, which can be a huge step.
Part of my commentary relates to the fact that you're very much, in the heart of Brussels, and from the way I see it from a policy perspective, I mean, it's also clear that we know that this regulation is coming. We received a couple of years to prepare. And it's also true that exchanges, if we take exchanges and custodians, of course, there's a lot of innovation to be brought as the crypto and the blockchain space evolves. But are crypto exchanges the most innovative startups out there? I mean, I think they had a couple of years in order for them to put things into place. From a policy perspective, what would be the benefit of protecting small exchanges in comparison with larger exchanges, which are super regulated, very well, let's say, coordinated from a IT cybersecurity perspective? That's a sort of a policy question. If I look on Central Eastern European markets, we always had a sort of very small exchanges, across Romania, a couple of them, and then you'd have the regional players and then the global players. So this is not a market which really invents itself as we speak. It's a market, at least on the crypto exchanges, that exists for some time now. Maybe with DeFi is going to be another story, because DeFi is, it's continuously boiling and we don't have rules. What I would suspect is that we will not have, like in the US, a sort of lighter or milder regulations or conditions for small entities, but probably we will continue with the sort of a sandbox approach in local in national state members, depending on the level of innovation that these projects will bring. So, the UKs were among the first, but then more or less every EU member state has a sort of a fintech sandbox, where you could be, let's say, you'll be tolerated in relation to some of the requirements of MiCA. I would suspect that this will come in all sorts of new areas, such as DeFi and other areas which are not purely 100% covered by MiCA.
Just one comment on the applicability. So the date when the MiCA will be applicable, we probably heard, and the listeners probably heard, that there has been a delay in the process. But from the day when MiCA will be publicly published in the official journal, in the European Union will have 18 months, as you mentioned, but also 12 months period for just the Title 3 and 4, which is basically the stablecoin part.
So one of the areas I was going to pursue next was kind of running through how MiCA could have prevented FTX, and we'll get into just the simple responses, because there's many levels of that. But before I do, I want to make sure that if there's like an area that you feel that we should be covering as it relates to CASPs, please we should cover that first. Just, I don't want to miss something very substantial and not have covered it through my questioning. So please feel free to kind of raise points now before we do the FTX run through, so to speak.
Maybe just one remark. We already talked about it during the previous episode, but anyway, is that like outside of and at a higher level, that's just the obligation, because the CASP regime by itself, it's something very interesting. We have said a lot about it, but it's still something expected, and most of the obligation and what MiCA ask and require from the CASP is very similar to what you have to the financial intermediaries. So everybody has understood that basically the Europe is extending the level of compliance from the traditional financial sectors to the crypto asset, to the European crypto asset industry at least. It's an extension, like from the bottom to the top. You have more level and more layer of compliance. Like it's quite comprehensive, but you have also more and more service. We are including within the functional scope of MiCA. For instance, advice on investment on crypto asset will be regulated as the financial instrument advisory is regulated right now. And what is very interesting, I think, especially right now when we are seeing a lot of collapse from certain actors and a lot of repercussion in most of the European country, we see like broker, or we see like service providers that are heavily impacted by the collapse of Gemini, BlockFi, FTX, and so on. Is that MiCA will probably be the beginning of the compliant, like a kind of systemic regulation, because in a very connected system, like the financial system is very connected. We saw that in 2008, and the crypto asset industry, even if it's 1,000 times smaller, is still very heavily connected. If you want to have trust, you need to have trust on your counterparty, but you also need to have trust in the counterparty of your counterparty and the counterparty of your counterparty of your counterparty. And only a very comprehensive and complete and regulation allow to reach this level of trust within all the market. I'm not saying that MiCA it's a miracle and will solve every issue and every problem in the crypto asset industry in the next 5 years, but I think it's the beginning, and it's a beginning at least of this new chapter of the crypto asset history. We are quietly leaving the teenage of the crypto asset industry, and we are like riding to something new. I hope it will be great, and I know that there will be winner, there will be loser, but at least I think it's a condition for like democratization and like to reach this new level of trust in the crypto asset industry. Sorry for this. I'm talking like a prophet, or but
no, it's excellent.
I think that's very important, and we saw in the past, especially you in Germany and France, what effect the regulation that you put in place had on the specific market. There were some that were, as mentioned, small companies and small exchanges. They were just shutting down, but there were new startups raising money just because the investors were confident that something could be built from the regulations that we have seen. And I just wanted to mention the reverse solicitation question. I know we kind of touched upon this in the previous episode, but in the process of negotiation of MiCA, there was some discussion if reverse solicitations should be prohibited under MiCA, and then the decision, as we know, was that it's not prohibited under MiFID, so will not prohibit it under MiCA either. But I think that might be very interesting for the crypto as a service providers that are not operating in Europe, and that might influence their decision when and how to ask for a license in Europe in the future.
Yes, definitely. I'm with you, Marina, and we should pay attention to the reverse solicitation, because the MiCA is going only to be applicable to the entire European Economic Area. But we have still so many players from the US who are not covered by the MiCA and who will not be covered by the MiCA, but who will still continue providing their services based on the reverse solicitation. And with this said, I would like to bridge it to the question what you brought up, Eric, to FTX, because I mean, we have three things we need to be very clear about FTX. What people take or get wrong. FTX is not just FTX Bahamas. FTX is very complex, and FTX had many entities within the European Economic Area which were regulated. So there was the FTX Cyprus entity, which had a MiFID license and which was already under the MiFID regime, which we understand when we remember back to the beginning of our talks. The MiFID regime is very similar to the MiCA regime. So, and to my understanding, what is a bigger issue than a lack of regulation, because there was no lack on regulation with the FTX Cyprus entity. The bigger thing we have, the bigger issue is that we have a lack of a globally harmonized regulation. So I think that MiCA and MiFID is very good, but it doesn't give you anything if you have entities outside of the European Economic Area which are going to provide their services to the people within the European Economic Area. Even though if it's based on reverse solicitation, which means that the citizen within the European Economic Area is freely by its own will asking for that service, and then something like with FTX happens. But coming back to your question, I just wanted to put some or two or 3 points which are very, I think, important inside the MiCA text, which show, I think, very directly, like thinking of FTX not being just a MiFID institute, but being really like a CASP under MiCA. I believe then in that case, MiCA would have helped to stop what happened with FTX. I only going to mention 3 articles which are very important. Article 59, which we already read once, is the obligation to act honestly, fairly, and professionally in the best interest of clients and information to clients. So if you would have had this regulation applying to FTX, I think lots of things which went wrong wouldn't have went wrong. This is the first thing, which is very easy to understand. The second thing, which is very important, it applies to anyone, not just to custodians, also to exchanges. It's the obligation under Article 63, I think. I'm just scrolling down. So Article 63 is the safekeeping of clients' crypto assets and funds, which reads, crypto asset service providers shall that hold crypto assets belonging to clients or the means of access to such crypto assets shall make adequate arrangements to safeguard the ownership right of clients, especially in the event of crypto asset service providers' insolvency, and to prevent the use of clients' crypto assets for their own account. And we have the same in Article 63, which is applying not just to crypto assets, but to fiat monies, which says the same. So these 3 clauses, which I just mentioned, if we imagine if you would have had these ones in place and given that FTX would fully comply with these rules, I honestly believe that we would not have had this dilemma like what we have now. But again, what I said in the beginning, we shouldn't focus too much on MiCA. We should focus on globally harmonized rules for crypto asset service providers. And I think this is the bigger picture and the bigger goal, which I hope is going to be happening hopefully in 2023 this year. And this is what the global environment on crypto needs.
Right. Within any jurisdiction, you can have that framework, but to the extent that there is a parent entity or a larger enterprise that's offshore in a less regulated jurisdiction, then it's hard to see how that's protected against. It's not just a MiCA question. To your point, it's MiFID, it's SEC, right, rules and regulations, broker dealer, CFTC, all these rules govern the US, but I mean they don't necessarily extend to the parent.
Yeah, but unfortunately with the FTX situation, it seems that the Japanese, who really had their own set of rules and a way of segregating and the sort of limiting the influence of the mother company, even if we are in a global trade where you can establish freely companies, they were the best protected in this specific situation because Japan had for that specific financial activities rules that allow them to create a separation between the entities. So Japanese customers were, at the end of the day, the ones who did not have the issues that general creditors for FTX US and FTX International have nowadays. But on the FTX, we are discussing a lot about regulations. But I would also, quote from the new CEO who's taking care of the company after and who's dealing with the whole deal. And he was saying that it was a sort of a blatant failure of all possible internal controls. So it's not really crypto related. This could have come with any company which does not care about conflict of interest, governance within an organized entity such as an incorporated company, be it in the US or in Europe. There were a lot of sort of failures. There was not a check and balance across the organization, and this doesn't honestly reflect on the FTX infrastructure or their cybersecurity plans and other operational points. It was a matter of governance, and governance relates to systems and people.
The most interesting thing is that today, in one of the victims of FTX, which is a Gemini, if I understand well, have published the list of the 30 or the 50 biggest creditors of Gemini, so the 30 biggest counterparties that have lost money with Gemini, and most of this counterparty was itself services who provide services to end user. And this is something MiCA will probably also prevent, or at least strengthen a lot. It will oblige this little, I say little compared to Gemini FTX, little broker in France, in Belgium, in Germany, to have their own due deal on the big offshore counterparty, and it will raise globally the level of regulation and the level of control within between the market player. And this is something this is something very interesting with FTX. Is we see that FTX was not regulated. It was in the Bahamas, so of course it was not very, very well regulated. But the problem is nobody cared at this time. Everybody was working with FTX without asking anything. It was a simple commercial relationship, and this is something that is not possible when we are dealing with a fund of clients, of consumer.
I think what will also happen is, in a way, the enforcement will have a better regulation in a way to go and to look into. And we do expect the national competent authorities to have more knowledge on these cases and also more manpower that will look specifically into crypto. Now that the whole process with FTX is in a way started, we know that there were feedbacks in terms of, the transactions that happened on chain, they're so easy to track, and we know exactly what happened. If it was on chain, we have all this information there, and if we know how to read it and how to use it, it will be even easier for us to determine what really happened. And I think that this is also something that we need to promote, and we need to have more people in different organizations that are actually doing enforcement to those events.